A very good afternoon, all the viewers. May blessings be upon you all. Welcome to Commerce second year classes. Hello. Very good afternoon, all the viewers. Hope you all are doing good. May God bless you all. Welcome to Commerce second year classes. The last three classes, we have learned addition of a partner, and we did some problems based on different methods of treatment of goodwill. Right? Like the first one was when the goodwill is brought in cash and retained in the business. The second method was when the goodwill was brought in cash and withdrawn by our partners. And today we are going to take up the third method when the goodwill is when the goodwill is raised or valued or created. In this method, the new partner will not introduce goodwill amount in cash. The old partners will do the valuation of the goodwill of the firm and they credit it to their accounts in the profit sharing ratio. Okay, so we are taking up that method. So what is the method we are doing? We are doing third method when goodwill is valued, or we say when goodwill is created or goodwill is raised. Goodwill valued or created or raised. So here there is no inflow of cash towards goodwill. The new partner will introduce only capital. He will not introduce goodwill in cash. So what is the treatment I told you? The old partners will do the valuation of goodwill and they will credit it to their accounts. So goodwill account debit to old partners capital account. Old partners capital account. Right? And since goodwill is showing debit balance, if you prepare the ledger of goodwill, it will show debit balance. It will appear in the balance sheet on the asset side. Appear in the balance sheet on the asset side. Right? So today we are going to do problems based on this method. Okay. Sure. So please be ready with the textbook, page number 247, question number 11. Page number 247 and question number 11. See what is the question saying? Vani and Sharda are partners sharing profit and losses equally. Their balance sheet is given. Okay, bills payable, bank overdraft, rent payable. Assets side, we have some fixed assets, some current assets. On the above date, Neeraja was admitted for 1/4 share in future profits. Neeraja should bring 50,000 as capital and goodwill of the business is valued at 40,000. Okay, so it is the method what I was discussing. This is the method where the valuation of goodwill is done, but the new partner will not introduce his share of goodwill in cash. Okay. Stock is valued at 58, building at 40. Creditors increased by 3,000. So as we do, we start with what? We start with revaluation account. That is the first step. So we start with revaluation account. And what do we show in revaluation account? In revaluation account, we'll show all the net increase or decrease in the value of assets and liabilities because of the revaluation. Okay, this is debit side. This is credit side. This is particulars column. This is amount column. Again, particulars and amount. Okay. So stock is valued at 58. If you see in the balance sheet, the value of stock is given as 60. And after revaluation, it came down to 58. So there is a decrease by 2,000. So take it on the debit side. Decrease tends to a loss. Take it on the debit side. And building is valued at 40. Building given in the balance sheet is 30. Now it is valued at 40. So there is an increase. Appreciation. Take it on the credit side. How much? The net difference you should take. 40 minus 30. Then creditors increased by 3,000. There is an increase in liability. Earlier, we had creditors of 20,000. Now they have increased by 3,000. So increase in liability is again a loss. So it has to be taken on the debit side. To creditors, 3,000. Okay. Anything else? Nothing. So let us close this. So we have 5,000 revaluation profit. Okay, this is what? 5,000 is the revaluation profit. And this revaluation profit is distributed between all partners, Vani and Sarda, in the ratio, in the profit sharing ratio, which happens to be equal. 1:1. Vani and Sarada. Both will get 2,500, 2,500. Is it clear? Okay. Then, as usual, we'll go to the next step. That is, what do we prepare? We prepare cash account. And in cash account, we'll show all the inflow of cash and outflow of cash. So it is cash, or let us say bank account. Okay, cash and bank account. What is the opening balance given? If you see on the asset side, opening cash balance is given as 8,000. To balance brought down 8,000. Okay, opening cash balance is 8,000. Then Neeraja, the new partner, introduced capital of 50,000 to Neeraja's capital. To Neeraja's capital. How much? 50,000. Did she introduce goodwill in cash? No, she did not. So we had only inflow of 50,000. Now the cash balance is 58. So now when we are preparing the balance sheet, we will take 58,000 as our cash balance. Okay. So to balance brought down 58,000. Right? So next is we prepare goodwill account. We prepare what? Goodwill account. Very important again here, pay attention. This is the third method where goodwill is valued. It is not introduced in cash. It is not brought in cash. It is valued. How much is the valuation given? It is valued at 40,000. The goodwill of the firm is valued at 40,000. And the new partner did not introduce it in cash. Right? Now, remember, I always tell whenever we are doing these problems, whenever we prepare goodwill account, always it has to be debited with all partners. To Vani, to Sarada. To Vani, to Sarada. What is the profit sharing ratio? Equal it is given. Okay. Equal it is given. So let us share this. 20,000 and 20,000. Okay. But then what do we get on the credit side? There won't be any account, because if you remember, if goodwill is introduced in cash, then we write by cash here. But here it is not introduced. And I also told you when goodwill is raised, goodwill will show debit balance. Goodwill will show debit balance. So here we have to write by balance carried down. How much? The total goodwill amount, 40,000. And this balance we again have to show in balance sheet. Sir, in the last two methods, we were not showing goodwill in the balance sheet. Yes, because goodwill account was getting closed by transferring to cash account. All these the problems what we did, we were crediting goodwill account with cash because goodwill was brought in cash. So we used to close it. But here, goodwill is not introduced in cash. The goodwill account will show debit balance. As such, this goodwill account will appear in the balance sheet. Is this clear? This is the first time we are doing this. Okay. Since goodwill is not introduced in cash, it is just valued. Goodwill will show debit balance. As such, it has to appear in balance sheet. We'll write a note for this. Since goodwill is showing debit balance, since goodwill is showing debit balance, it will appear in balance sheet on the asset side. Okay, this is it. Okay, chalo. Let us move to our partners capital account. What are we preparing now? We are preparing partners capital account. Okay, so it is a columnar account, combined capital account Vani, Sarada, and Neeraja. Vani, Sarada, and Neeraja. Okay, particulars and the name of partners. This is particular spot. Particular spot. Okay. So I always tell no, whenever we are preparing partners capital account, usually we get 4 items on the credit side. What are those? First one is capital of the partners. Second one is goodwill. Third one is accumulated profits or losses. Fourth one is revaluation profits. So let us begin with the capitals. What are the capitals given? 60,000 and 60,000. Old partners capital by balance brought down 60,000, 60,000. Okay. Then the new partner, Neeraja introduced how much? Neeraja introduced 50,000 as capital. So that will write as by cash 50,000. This is first entry. What is the second one? I said goodwill. Goodwill is distributed to old partners. How much did we do? 20,000, 20,000. Right? Okay. Then any accumulated profit, general reserve or P&L balance. Okay. We don't have any such item. We have bills payable, bank overdraft, rent payable. We don't have any general reserve or P&L balance. Okay. Then the next item is, so we don't have by general reserve. We have none. Then we have revaluation profit. We prepared revaluation account and we had incurred a profit of 5,000, which was credited equally among both the partners, 2,500 and 2,500. Anything else? Any accumulated profit is not there. Loss is also not there. So now let us close their accounts. Let us close the capital account. 60 plus 20, 82,500, 82,500 and 50,000. Okay, so write the same capitals here as the closing balances. To balance carried down 82,500, 82,500 and 50,000. By balance brought down. Done. Okay. Now let us prepare the balance sheet. Okay. Let us prepare the balance sheet. When we prepare the balance sheet, I always tell, prepare it in the same sequence as given in the question. Balance sheet of the new firm as on. Okay. What is the date given? When was the admission done? There is no date. So we'll take it on 31st March 2020 only, the given date of balance sheet. Okay. This is the liability side. This is amount. This is the assets side. This is the amount. Okay. So get ready. We are doing balance sheet. As I said, we'll do it in the same sequence as given. What is the first item? Cash. Take cash. Okay. How much we have? Cash 8,000 and we had prepared cash account. What was the balance? We had 58,000. So we'll take 58,000. Bank, you can take this in cash and bank account also, or else you can show it separately, not an issue. Bank, it is 12,000. Okay, then debtors. Debtors are 30,000. There is no change on debtors. So like as it is. Then we have stock. Stock is revalued. Stock appearing in the balance sheet is 60,000, but then it is revalued. It is revalued by 2,000 and now the balance is 58,000. Okay, similarly, building, machinery, there is no change, right as it is. Machinery is given as 50. Machinery is 50, no change, right as it is. Then building given in the balance sheet is 30,000, but now it is revalued and its value is appreciated by 10,000. So now building will appear at 40,000. Building will appear at 40,000. Okay. Anything else? Very, very important thing you should write here. One, that is goodwill. That is goodwill. How much? 40,000. Sir, why are we writing goodwill here? I told you, when we prepared the goodwill account, it was showing credit balance. So I told you, no, since goodwill is showing debit balance, it will appear in the balance sheet on the asset side. So remember, whenever goodwill is valued, this method is given. Goodwill has to be shown on the asset side. Goodwill balance total amount, goodwill of the firm is to be shown on the asset side. Okay. Then let us see the items on the liability side. Bills payable, no change. Bank overdraft, no change. Rent payable, no change. Creditor, 20,000, increased by 3,000. Okay. So we'll start with bills payable. Bills payable is 20,000. Then bank overdraft. Sorry, it's not 20,000, it is 15,000. Then bank overdraft, it is 25,000. Bank overdraft is 25,000. Next, rent payable, 10,000. Rent payable is 10,000. Creditors. Creditors are given as 20, but we will not take 20 because creditors increased by 3,000. So we will have to show creditors at 23,000. Then we'll have capital. Capitals of Vani, Sarada, and Neeraja. What capitals will take? We'll take those figures which we have arrived at after doing all the adjustment. 85, 85, and 50. So Vani's capital is 82,500. Sarda's is 82,500. And Neeraja's is 50,000. Is it correct? Yeah, 82, 82, and 50. Sorry, I told 85. Now let us do the totally. See the sum up. What is the total? The total is 58, 71, 158, 208, 288. It's 2,88,000 on the asset side. 15, 40, 50, 73, 123, 124, 128, 128, and 16. 2,88,000. Here also we got 2,88,000. Okay. This is how we arrived at the final figure. Balance sheet got tallied. Okay. Sure. That's good. We'll take one more problem based on this method. That is question number 12. We'll take question number 12. Question number 12. A and B are partners sharing profit and losses. In the ratio 3:2, their balance sheet as on 31st March is given. Okay. Again, here there is a new thing that we learn. Goodwill, if you see, is already given in the books. All these while we were doing problems, we never had any problem showing goodwill on the asset side given in the question. But in this case, goodwill is appearing in the books already, 10,000. And capital is 60,000. Goodwill of the firm is valued at 40, plant and machinery. Okay, so we'll start with our revaluation account. As we usually do, we'll start with our revaluation account. We are doing question number 11. Question number 11, and we are preparing revaluation account. Revaluation account. So, plant and machinery is depreciated by 5%. Plant and machinery is given as 50,000. It is depreciated by 5%. 5% of 50,000 would be 2,500. Next, create a provision for bad debts at 5%. Debtors appearing in the books are 40 and asking us to create a provision of bad debt at 5%. Again, that would be 2,000. 40,000 into 5 by 100. Then building is valued at 10,000. Building appearing in the books is 30. Now it is valued at 40. So there is appreciation of 10,000. So I'll take it on the credit side. Appreciation is a gain. I'll take it on the credit side. Right? Anything else? No. So let us close this. 10,000. 10,000. And our revaluation profit is 5,500 to revaluation profit. This revaluation profit is distributed among all partners A and B in the ratio 3:2. So how much will A get if I distribute in the ratio 3:2? That is, how will we do? A will get 5,500 into 3 by 5. That is 3,300. And we will get 5,500 into 2 by 5. That is 2,200. Okay. Then we'll prepare cash account. Cash oblique bank account. Cash oblique bank account. What is the opening cash balance given? Cash at bank is given as 25,000. Cash at bank is given as 25,000. Okay, so let us take to balance brought down 25,000. Right? Then the new partner, C, introduce 60,000 as capital. So that will take to C's capital 60,000. And he did not introduce goodwill in cash. Whereas the goodwill is valued at 40,000, goodwill of the firm is valued at 40,000, but the new partner did not introduce it in cash. So obviously it will not affect our cash balance or bank balance, so will not be taken in cash account. Now our bank balance is 85,000. It is 85,000. To balance brought down 85,000. Okay. Then goodwill account. Then goodwill account. Now here you pay attention, please. Here you pay attention. When we are preparing goodwill account, there is a new adjustment to be done. All this while, when we were doing problems, we never had any problem with goodwill given in the balance sheet on the asset side. But here we are having goodwill given in the balance sheet. How much it is? 10,000. Okay. Now I need to explain this. I'll take it on another slide. Goodwill is given in the balance sheet as 10,000. Now goodwill is valued at rupees 40,000. Okay. Now when goodwill is already appearing in the books, when goodwill is already appearing in the books, it means already 10,000 is credited to old partners. If it is on the asset side, 10,000 is given on the asset side, means it is already credited to old partners. How much? 10,000 is already credited. Now the value of goodwill is 40. So what is the gap? It is increased by 30,000, let us say. It is increased by 30,000. So now we should credit old partners with rupees 30,000 only. When goodwill is already appearing in the books, old partners are to be credited with the net increase in the value of goodwill. Okay. And while writing the balance sheet, we will show the goodwill amount as 40,000. Try to understand this adjustment. When goodwill is already appearing in the books, 10,000 is already there on the asset side. It means 10,000 is already credited to old partners. So now we have to credit the old partners with the increase in the value of goodwill, that is 30,000. Okay. So when I'll write the entry in the books, goodwill account debit to, who are the old partners? A and B. right? So I will credit only 30,000. I will not take 40,000. I'll take only 30,000, and 30,000 I'll credit to them in the ratio 3 is to 2. That is 3 by 5 and 2 by 5. So A will be credited with 18,000. B will be credited with 12,000. Please pay attention here. Goodwill is already appearing in the balance sheet at 10,000. Now goodwill is valued at 40,000. So partners to be credited only with the increase in the amount of goodwill, that is 30,000. So A will be credited with 18,000. B will be credited with 12,000. Is it clear? And this amount, 40,000, will appear in the balance sheet now. In the new balance sheet, goodwill will appear at 40,000. Okay. So here, as I said, to balance brought down. What is this? This is the opening balance of goodwill given in the balance sheet on the asset side. What is this? What is this? This is the goodwill amount given in the balance sheet on the asset side. You see, asset side goodwill is given as 10,000. That amount you should write on the debit side. Okay. And now, how much are we crediting A and B with? How much are we crediting A and B with to A to B? A was credited with 18,000. B was credited with 12,000, right? I had shown you here. That amount you should take. So now it is 40,000 by balance carried down 40,000 and to balance brought down 40,000. Again, goodwill is showing debit balance. So goodwill amount will appear on the asset side of the new form. Okay. Sure. What is the next step? We prepare partners capital account. Partners capital account. Okay. So who are the partners? Partners are A, B, and C. Partners are A, B, and C. A, B, C. A, B, C. Particulars. So what are the items we get on the credit side? I tell no. Usually we get 4 items. What are those? First one is there. Capital by balance brought down. By balance brought down. A's capital is 60, B's capital is 40, and C's capital is 60 again. 60, 40, 60. A's capital is 60, B's capital is 40, and C has introduced 40, 60,000. Is 60,000. Okay. The second item is goodwill. Just now we have learned so much now. 18,000 credited to A, 12,000 to B. Then see if any accumulated profits are there. Yeah. General reserve is given. General reserve is given as 20,000 and P&L credit balance is also given as 10,000. General reserve 10,000 is a accumulated profit and P&L credit balance also is to be credited. Both these items are to be credited. So we'll take by general reserve 20,000 credited in the ratio 3:2, 10,000 credited in the ratio 3:2. So 20,000 into 3 by 5, 12,000, 8,000. P&L credit balance, 10,000 credited in the ratio 3:2, 6,000, 4,000. And lastly, we have revaluation profit. How much profit did we get? We got a profit of, we prepared revaluation account, we had a profit of 5,500, which was distributed in the ratio 3:2. So A got 3,300, B got 2,200. Done. Anything else? Nothing. Go through once. Okay, capital, goodwill, accumulated profits, and revaluation profit. Now let us do the sum up. What is the sum up you see? A's total would be 60, 78, 30, 90. It is 99,300, 66,200, and 60,000. 99,300, 66,200, and 60,000. Okay. Okay. Then we'll prepare the balance. We'll prepare the balance sheet. Balance sheet of the new firm as on balance sheet of the firm of the new firm as on 31st March 2020. What is the first item? What is the first item? Goodwill. Okay. So start with goodwill. How much you will take now? 40,000. Goodwill in the balance sheet will appear at the latest value, 40,000. Building, 30,000. Appreciated by 10,000. Okay. Building, 30,000. Appreciated by 10,000 will appear at 40,000. Then plant and machinery depreciated by 5%. Plant and machinery, the book value is 50. It is depreciated by 5%. That is 2,500. Deduct. So we have 47,500. Next, stock. Stock, there is no change. Stock, there is no change. Stock is given as 20. Stock is given as 20. There is no change. Debtors. Debtors are given as 40, and we have created a provision of 5%. 40 minus provision for bad debts, 2,000. So net figure is 38. And cash at bank. Cash at bank. We had prepared cash account, no? Let us take the figure from there. How much cash balance we got? 85,000. So we'll take it at 85,000. Cash at bank now is 85,000. Okay. Then on the liability side, we have trade creditors. Trade creditors. How much? It is 15,000. Trade creditors are 15,000. Then we have bills payable. How much? 30,000. Bills payable, 30,000. General reserve, P&L balance, we won't take because we have already distributed those two. We take capital of A, B, and C. We have prepared their accounts, no? Capital accounts. What did we get? We got 99,300, 66,200. 99,300, 66,200, and 60,000 capital of the new fund. See the total. Do the totaling on both the sides. On the asset side, 40, 80, 127, 147, 177, 185, 185, 2,70,500. So total is 2,70,500. Here 45, 500, 66, 126, 216, 216, 240, 245, 270. 270. Okay. Once again, 500, 655, 01, 12, 22, 23, 24, 25, 26, 27. Yeah. Okay. So this is how we are done with the third problem. We'll take one more. We do have 13 problem again here. Goodwill is appearing in the books, but it is not expected in exam that he'll give this case where goodwill already appears in the books. He may give this method where goodwill is valued at, but goodwill already appearing in the books is the, I should say, 0% chance. So instead, shall I take one example problem? Okay, then let us take question number 13 only. We don't have problems. So we'll take question number 13. See the question, Praveen and Naveen are partners sharing profit and loss in the ratio 3:1 respectively. Their balance sheet is given and goodwill is already appearing as 28,000 and now the value of goodwill is 20,000. So if you see the difference in the last problem, question number 12, goodwill in the books was 10,000 and the present value was 40. So what we did, we credited the partners, credited to all partners rupees 30,000, isn't it? But now in question number 13, goodwill appearing in the books is 28,000 and the present value of goodwill is 20,000. So there is a decrease. The goodwill has come down. The reputation of the business has come down, maybe for whatever reason. Now what we should do is rupees 8,000 is to be debited to old part. So very simple. If there is an increase, we credit it to old partners, and if there is a decrease, we debit it to old partners. How much? The net amount. And in the balance sheet, now the goodwill will appear in the balance sheet at 20,000. Okay. Goodwill will appear at 20,000. Okay. So we'll start with revaluation. They decided to admit Kiran into partnership on the following condition. Kiran has to bring 25,000 as capital. Machinery and furniture depreciated by 10%. Building be appreciated by 20%. Stock by 10%. Okay. So this is question number 13. Question number 13. I am preparing revaluation account. Revaluation account. Particulars amount, particulars amount. Machinery and furniture be depreciated by 10%. Machinery is given as 20,000. 10% of it would be 2,000. So to machinery depreciated by 2,000. To furniture. Furniture is depreciated by 10%. Furniture is given as 10,000. So it would be 1,000. Then building is appreciated by 20%. Appreciation is again by building appreciated at 20%. What is the value given? 20,000. 20,000, 20% would be 4,000. And stock also is appreciated by 10%. The given value is 15. 10% would be 1,500. Okay. So see what is the result of revaluation account. Did we incur profit or loss? Machinery is depreciated by 10%. Okay. Create 5% provision on debtors. This is also given. Provision for bad debts at 5%. Debtors are given as 30,000. 30,000, 5% would be 1,500. Okay. So now let us see what is the result of revaluation account. Credit side we have 5,500. Debit side we have 4,500. Credit side we have 5,500. Debit side we have 4,500. So revaluation profit is 1,000, which has to be distributed between Praveen and Naveen. What is the ratio? What is the profit sharing ratio? It is 3:1. So 1,000 into 3 by 4, 750 will go to Praveen, 250 will go to Naveen. Okay. Is it clear? Yeah. Now let us see cash account. Let us see cash account or bank account. Cash oblique bank account. Okay. So particulars amount as it is. What is the opening balance given? Cash at bank 5,000. Cash at bank is given as 5,000. And what is the capital introduced? It is 25,000. Kiran is the new partner who had introduced 25,000. And goodwill is not introduced in cash. So we have 30,000 now as the closing bank balance. We have 30,000. To balance brought down, it is 30,000. Clear? Good. Yeah. What is the next one? Yeah. Tell me what is the next one? The next one is goodwill account. Goodwill account. Goodwill account opening balance is given. What is the opening balance given? Goodwill already appearing in the books. We have to take it on the debit side of goodwill account. How much it is given? 28,000. So take two balance brought down 28,000. But the value has now come down to 20,000. When goodwill is already appearing at 28,000, so this amount might have been already credited to old partners. Earlier, it had already might have been credited to them, but the value has come down. So now that excess 8,000 has to be debited to old partners. So I'll write by Praveen and by Naveen. What is this I'm doing? What is this I'm doing? See, present value of goodwill, or I'll take like goodwill appearing in the books. Goodwill appearing in the books. It is 28,000. Goodwill already appearing in the books 28,000 minus goodwill present value. Present value is how much? 20,000. So this 8,000, this amount is debited to old partners. What is the ratio? 3:1. So 3/4 and 2/4. So Naveen will get 3/4. 4 2s are 6,000, 2,000. Okay, 6,000, 2,000. So what will be the balancing figure you see? 28,000 by balance carried down 20,000. So tell me now, at what value will it appear in the balance sheet? It will appear at 20,000. Okay. Before that, we have to prepare partners capital account. So we are preparing partners capital account. Praveen, Naveen, Kiran. Praveen, Naveen, and Kiran. Okay. This is particulars column, of course. Particular. We usually get 4 items on the credit side. What are those? First one is the capital. Capital of Praveen is how much? 30,000. Capital of Praveen is 30. Naveen is 25. And Kiran has introduced 25,000 as his capital. By Kiran, 25,000. Then we used to take goodwill here. We used to credit the partners with goodwill. But here, goodwill will not appear on the credit side because they were already credited with excess amount and there is a fall in the value of goodwill. So goodwill will appear here on the debit side, 6,000 and 2,000. I explained this on the last slide, right? Since there is a fall in the value of goodwill, the decrease in the value, the net decrease will be debited to old part. Then, do we have any accumulated profit general reserve? Yes, 10,000 is there. Distribute it in the ratio 3 is to 1. 3 is to 1. So he'll get 7,500 and he'll get 2,500. Then revaluation profit. We got a profit of 1,000. 750 was given to him, 250 to him. Close the account. Balance the accounts. Right? So you see 37,000, 38,250, 38,250 minus 6,000, 32,250. This is the closing balance of Praveen account. 32,250 is the closing balance of Praveen account. Naveen account, you see 22,750. 22,750 minus 2 is 20,750 and 25,000 25, right? By balance brought down. So Praveen's capital now is 32,250. Naveen's is 20 and Kiran's capital is 25. So we are just one step behind. If we do balance sheet, the complete solution is done. So let us take balance sheet now. Balance sheet of the new firm as on 31st March 20. Liabilities, rupees, assets, rupees. Cash at bank. What is the first item? Cash at bank. It is 30,000. We have prepared cash account now, 30,000. Then trade debtors, 30,000. Will we take 30? No. Because we have created a provision of 5%, we will deduct that 1,500 and we'll take 28,500. Next is stock. Stock is appreciated. Stock 15,000 is given and it is appreciated. There is an increase in the value at 10%, 1,500. So we'll take 16,500. Next, furniture. Furniture is depreciated by 10%. Furniture, 10,000. It is depreciated at 10%. That is 1,000. And the book value now is 9,000. Then machinery. Machinery also is depreciated by 10%. Machinery appearing in the books is 20,000. It is depreciated by 10%. So there is a decrease of 2,000. So take 18,000. Building is 20,000. And building is appreciated by 20%. Add appreciation 20%. 4,000 would be 24. And goodwill will appear at the present value, that is 20,000. Right? Now on the liability side, we have sundry creditors, no change, right as it is. How much? 48,000. 48,000. Bills payable, no change. General reserve is distributed. Take the capitals of Praveen, Naveen, and Kiran. We have prepared the ledger accounts now. Just now, 32,250, 32,250, 20,750, and 25. Just check the total. Check the total. $58, $59, $69, $75, $84, $94, $102, $102, $1,46,000. Here 48, 68, 70, 1 lakh, 120, 145, 1,46,000. Yeah. This is how we are done. I am concluding the session today here. Tomorrow we'll start the second part of this, that is retirement of a party. Okay. So please do revise all these questions what we have practiced. Take care. Goodbye.